Hi everyone. So the company that I was focusing on for the story behind the numbers project is Allbirds. So Allbirds is a footwear company that has gained significant recognition for its sustainable and environmentally friendly products. The company was founded in 2014 by Tim Brown and Joey Zwillinger, with a vision to create comfortable and eco-friendly footwear without compromising on style. Allbirds is known for its innovative use of materials that are both renewable and biodegradable. The nature of Allbirds' business revolves around providing consumers with high quality sustainable footwear and apparel options. The company focuses on creating products that prioritize comfort, simplicity, and sustainability. Allbirds aims to address the environmental impact of the fashion industry by offering products that are made using natural materials and production processes that minimize carbon emissions. The company's commitment to sustainability extends beyond its products and into its overall operations, with initiatives such as carbon neutrality and reducing waste within its supply chain. Allbirds generates its revenue by selling its footwear through various channels. The company operates its own e-commerce platform, allowing customers to directly purchase products from its website. Additionally, Allbirds has opened a brick and mortar retail stores in key locations, both in the United States and internationally. By combining online sales with their physical retail presence, the company caters to a wide range of customers. Allbirds also collaborates with other brands and retailers for limited edition collections and partnerships, expanding its reach and its customer base. With its commitment to sustainability and innovative approach to materials and production, Allbirds has carved out a niche in the market and garnered a loyal following of environmentally conscious consumers. So based on the company's annual report, I learned that the company's net revenue has increased significantly over the past 2 years. This is indicating that they are likely implementing strategies to increase sales. The company's net income has also increased, which suggests that they are likely implementing cost-cutting measures or other strategies to improve profitability. Allbirds has also invested heavily in property and equipment. This indicates plans for expansion or upgrading their infrastructure. And finally, the company has also increased its investments in intangible assets such as patents and trademarks, which also suggests they are focused on protecting their intellectual property and attempt to gain a more competitive advantage. The company's business environment needs to be analyzed using three components. First, the rivalry among existing firms. So, who are the main competitors and what are their strengths and weaknesses? Second, the threat of new entrants. So, how easy is it for companies to enter the market and what barriers already exist or may exist in the future? And finally, the threat of substitute products or services. So, any other products that could replace or compete with the company. Allbirds operates in a highly competitive market, and the size and resources of some of their competitors may allow these companies to compete more effectively than Allbirds can, which could result in a loss of market share and decrease in their net revenue and profitability over time. Some of Allbirds' competitors include the bigger shoe brands like Nike, Adidas, and then along with the similar mission-based brands like Rothy's or Skechers. While there are limitless threats of new entry in this industry, there is also a strong threat of substitute products or services. With the increase in discussion on climate change crisis, we are seeing a lot of retailers starting to find ways to include eco-friendly trends into their mission and their production, which would take away from Allbirds' niche's competitive advantage. And now into the balance sheet and statement of stockholders' equity. So I won't go into all the details of the balance sheet, but some of the key items that I will focus on in my analysis include assets, liabilities, and stockholders' equity. So the major components of the balance sheet are assets and liabilities, which is pretty common across many companies in different industries as well. And we see regarding Allbirds assets, as of March 31, 2023, the total assets of Allbirds are a little over 1.5 million. The assets section of the balance sheet lists items owned by the company that have monetary value and will provide future economic benefits. The major asset category in the balance sheet are current assets, property, plant, equipment, along with other long-term assets. The company's investment in property, plant, and equipment is unique to them as they have an environmentally friendly approach in all aspects of their production and supply. In terms of liability, as of March 31, 2023, the total liabilities of Allbirds were a little over $1.2 million. The liability section of the balance sheet lists debts owed by the company to others, including suppliers, creditors, and lenders, and so on. The major liability categories in the balance sheet currently are current liabilities and long-term liabilities. So the balance sheet shows that there are a number of shares of common stock outstanding is over 68 million, while the number of shares authorized for issuance is a little over 750 million. This means that the company has a large number of shares that are authorized but not issued. And there were significant changes in Allbirds stockholders' equity from the prior year. So this increase was mainly due to net proceeds received from the company's Series D funding round, which raised approximately $100 million. Additionally, the company reported a net loss of over $25 million, which was partially offset by a decrease in accumulated other comprehensive losses. Overall, the changes in stockholder equity reflect the growth and investment in the company. And there's nothing truly to flag here. So after reviewing the financial statements of Allbirds, I can see that Allbirds' short-term assets as of March 31, 2023 were a little over 156 million, while its long-term assets were around 78 million. This represents a proportion of approximately 67% of short-term assets, followed by 33% long-term assets. This proportion of short-term to long-term assets indicates that Allbirds has a higher focus on liquidity and short-term cash flow generation. This is a common trend in the textile and apparel industry where companies need to be able to react quickly to changes in consumer demand and fashion trends. By having a higher proportion of short-term assets, Allbirds is better positioned to navigate the fast-paced nature of this industry. However, it is important to note that the proportion of short-term to long-term assets can vary depending on a company's specific business strategy and objectives. In Allbirds' case, the company's focus on sustainability and innovation may require more long-term investment in research and development and sustainable sourcing, which could lead to a shift in the proportion of short-term to long-term assets in the future. And now largest assets and liabilities. So based on the financial statements, the largest assets are the company are its property, plant, and equipment, along with intangible assets. These intangible assets include manufacturing facilities, office space, patents, trademarks, and other intellectual property rights. On the other hand, the company's largest liabilities are its long-term debt and lease obligations, which include borrowing from banks and financial institutions, as well as lease payments for its manufacturing and office space. There are significant changes in the company's assets and liabilities between the two periods. So the company's property, plant, and equipment increased significantly due to the company's investment in new manufacturing facilities and office spaces. And additionally, the company's intangible assets increased due to the company's investment in research and development. There are also significant changes in the company's liabilities. So the company's long-term debt increased significantly due to the company's borrowing to fund its expansion initiatives. And likewise, the company's lease obligations increased due to the company's leasing of new manufacturing and office space. Overall, the company's changes in assets and liabilities were driven by its initiatives to expand and grow its business operations while maintaining that sustainability aspect in production. Now looking into the ratios of the stockholder equity. So based off the return on assets, asset turnover ratio, the current and quick ratio, and the liabilities or debt to equity ratios, we found that the company has been generating losses and are not obtaining their expected benefits. The cause could be their competition and threat of new entrants. Allbirds may not be using its assets effectively to generate revenue, or they have a large amount of fixed assets that are not easily converted to cash. And finally, there are no concerns in the company's ability to meet its short-term and long-term debt, but the changes in ratios could be attributed to the economic and competitive facts that impact the industry and the company itself. And looking at the marketing capitalization, so the current marketing cap of Allbirds is a little over 258 million, and it was much lower than, or a little bit lower than the book value of $316 million. Market to book ratio is about 15%. And some of the factors that cause the differences between market capitalization and book value include growth potential, the industry conditions, the investor settlements, the financial performance, and the accounting methods. So investors really aren't valuing Allbirds as highly as its book value suggests due to concerns about competition and all the risks and potential weaknesses that Allbirds could run into. And now into the income statement. So looking at the income statement, my analysis mainly focuses on the operating expenses and the gross profit, and of course, total revenue. So the major components of the income statement include revenue and sales, cost of goods sold, gross profit, operating expenses, operating income or operating profit, other income and expenses, and net income or net profit. Some items to flag from the income statement were cost of goods sold and marketing and advertising expenses. So for cost of goods sold, an industry where the cost of raw materials or manufacturing is significant, cost of goods sold may account for a substantial portion of expenses. Allbirds, being a footwear company, might have significant costs associated with sourcing raw materials, production, and manufacturing processes. And in terms of their marketing, Allbirds has gained recognition for its sustainability-focused products and unique marketing campaigns. Given the competitive nature of the industry, marketing and advertising expenses could be a significant component of the company's expenses, but it allows for them to still maintain that competitive advantage over some of its competitors. Now, looking at it from a manager's perspective, there are 3 items that really stood out to me and were important out of the income statement. So, revenue growth. Managers closely monitor revenue growth to assess the company's ability to attract customers, penetrate new markets, and increase market share. In gross margin, so the gross margin is calculated by dividing the gross profit by revenue and is essential for managers. It indicates profitability of each unit sold after accounting for direct production cost. Basically, also looking at that return on investment. And finally, operating expenses. So how much is going into our operations, which is something that was very important coming out of this income statement as well. And finding areas where we can cost reduce or be more efficient in our improvements made. Some of the factors causing these conditions include market competition. So operating in the highly competitive footwear industry, increased competition could impact revenue growth or marketing expenditures. Product innovation. So Allbirds' success is attributed to its innovative, sustainable products. Their ability to introduce new and appealing products will impact revenue growth. Production costs, so fluctuations in the cost of raw materials, manufacturing, or labor could impact gross margin and profitability. And finally, marketing effectiveness. So Allbirds' advertising influences brand awareness, customer acquisition, and sales growth. And in a time like today, where social media and all sorts of different marketing campaigns are targeted to certain consumers, and being able to understand that brand awareness and new ways to tap into that new consumer or even your targeted consumers is very important to maintain that competitive advantage over your competitors. So coming out of the expense analysis, Allbirds' interest expense was approximately a little over $225 million compared to their revenue in the same time period of $297 million. So interest is not a significant expense for the company. But Allbirds does have short and long-term debt in the form of loans and financing lease obligations. Allbirds still needs to pay interest on its outstanding debt, which will increase financing costs, but debt levels are still relatively low compared to its equity and total assets, which is a positive indicator of Allbirds' financial strength, which we have seen throughout this analysis. Some conclusions coming out of the income statement. So there aren't any unusual items recorded on the income statement that seem out of character for the company itself or within the industry. Major acquisitions or divestitures will impact revenue or expenses and net income in the case of Allbirds. The income statement aligns with the industry and business environment, like I mentioned, and there's a current high demand and revenue growth for sustainable products. But in this competitive market, other competitors are starting to catch up with the sustainability trends. So the decrease in profit margins leads to more risks and weaknesses, which is something that Allbirds will definitely need to look out for and plan ahead for. Allbirds' strength right now is the position of being an environmentally sustainable product and building a brand known for this. However, their weakness is trying to maintain profitability and growth in such a competitive market if they are going to expand their product into, more apparel similar to like Nike or Adidas and being able to expand more globally. And finally, the statement of cash flows. So the major components of the statement of cash flows consisted of operating activities, investing activities, and financing activities. There is a significant outflow of cash right now, but it is important to note that Allbirds is a growing company and may be investing heavily in its operations to support the future growth that they're going to have to sustain over time. So all activities were a source or use of cash for Allbirds. So operating activities, the statement of cash flow shows a negative cash flow from operating activities, which indicates that more cash was used in the operations of the business than was generated. Investing, so these activities were a use of cash for Allbirds. In the financial statements, the company reported a net cash outflow of a little over $24 million from investing activities in 2022. This means companies spent about 24 million on investing in that property, plant, and equipment that has continued to come up in the analysis, which aligns a lot with Allbirds' strategic plan. And then finally, financing. So the company reported a net cash inflow of $112 million from financing activities in 2022. So the company raised over 112 million from financing, such as like issuance of common stock, borrowings on their company's credit facility, and more. Therefore, in this case, finance activities were a source of cash for Allbirds. The main source of activities that were a use of cash for Allbirds, I would say, was their investment. Again, their investment in property, plant, and equipment has been huge for Allbirds, not only to maintain the competitive advantage that they have, but also to prep them for the future and to maintain any sort of effects that come from the threat of new entrants or weaknesses that may approach from other competitors. And on conclusions on the statement of cash flows, so the previous analysis makes sense based on the company and the industry that they fall into. It is a competitive realm that makes it important to focus on investing in certain areas to try to maintain some sort of competitive advantage. So Allbirds is on the smaller side of their competitors in the bigger industry realm. It is important for them to figure out what activities they actually need to make a deeper investment on at the time that still maintains with their strategic plan and goes along with their brand. And based on the company's cash flow activities and the previous considerations, the company's weakness is currently in their stock plummet, which has caused some issues in cash flow and revenue. Their strength is continuing to focus heavily on investing where they can on their operation in property, plant, and equipment. And that is the last of my presentation on Allbirds and their financial statements. Thank you.